Money Day, people. I hope you're well. Today, of course, we do have another Sunday setups hosted by myself, the one and only Vell. What we're going to be doing today, of course, is taking you guys through the charts, letting you know what we see on the markets, and most importantly, how you guys can anticipate the information you're going to receive today to what we should see on the markets come open next week. Now, with that being said, as always, be sure to check out litcapital.co.uk. If you have been thinking about learning how to trade, you've been thinking about wanting to invest into the markets, then it's definitely most recommendable that you guys go over to our free course section, have a look at our free information. We've got a wonderful beginner's guide ebook, as well as a playlist that can help you guys take your trading to the next level. If you're someone who's been dabbling in the trading market for some time now, press this button, okay? Contact us. You can book a free consultation, and you can really put yourself in a position, if I move my camera out of the way, you can book a free consultation and give yourself a chance to actually have a conversation with us, jump on a Zoom session, share information, and we can help you take your trading to the next level. Now, with no further ado, we're going to go into the economic calendar because we understand that we've just started Q4. So of course, we can expect to see some heavy moves in the market. We just had NFP, and I'll go into that a bit later. But following next week, we do have information that's going to potentially move the markets, really starting from Wednesday. We've got GDP for the pound. We've also got some CPI for the dollar combined with FOMC meeting minutes. Thursday, we have initial jobless claims, PPI, and as always, we've got the crude oil inventories. Now on Friday, it gets a bit shorter in terms of economical news that could impact the markets. Should I say it gets a bit weaker as we've got the core retail sales and retail sales. So really, the week will probably be providing us with the most volatility around Wednesday and Thursday. But of course, as I just mentioned, we previously had the NFP on Friday, which really did actually push gold 245 pips north, okay? Now, as mentioned on our live streams, which is really important, if you're not involved in our community, which is on Discord, it's very important you either leave a comment below or head over to our website. And when you go into the packages page, there is also, if I show you guys here, on the packages page, there is community access, okay? You guys can request community access. It is for a fee of £25 a month, okay? Once you smash that button, we get in touch with you guys, we get you guys involved in our community, and you're able to find resourceful trades. You're able to see what we're looking at. You're able to have a conversation with us on a daily basis, okay? From Tuesday to Friday, 6:30 a.m. to 8:30 a.m. GMT. We live stream also in the afternoon. For the lunchtime stream from 12:45 to 2:45, we also do another stream which covers the New York session combined with the New York stock open. So we really do give you guys more than enough time to interact with us, which can allow you, of course, to secure the bag. That's why we're here. So based on that, we have been looking to short gold because we understood that throughout last week, the markets was moving really stale. We did have a whole consolidated range here. But when the NFP result came out, it did shoot gold right up into the 62% based on this 4-hour swing. And it gave us a chance to have a reaction out of this lit block here, which you can see gives us two confluences. You know, we had the lit block, we had the fib. And if we're also taking the structure into consideration, we was in a bearish structure, okay? We had a new low here. And then, of course, we had price push up. And price broke this lower high here, but when it came to the next lower high, it failed to do so. So in actual fact, what price done is it pushed up, failed to break the structure, and then it pushed down and looks like it's potentially going to be mitigating out of this area to even on Monday, potentially push right back up. But nonetheless, a short of over 200 pips on the live stream enabled people to pretty much wrap up the week in one trade. So with gold, what I'm looking at moving forward now is I'd actually like to see gold come back down, okay? I'd like to see gold come down. I think I mentioned on last week's call that we wanted to see gold go up into the upper room. If I just go across to the DXY, okay, as mentioned last week, if you check the previous video, we was inside of a range here, okay? We did have an all-time high in terms of the yearly high, but with that being said, there wasn't really much strength coming from the dollar, and that's based on the bond market. As mentioned to you guys again the week before, we mentioned that the bond market is something that we're really heavily focused into. And if you would like to know more about how we correlate the bond market to trading Forex, then it's definitely valuable for you guys to check out our courses, or even to get in touch with one of us. Book your free consultation so you can find out how we're using different instruments to give us a better understanding on which direction we're trading. But we did anticipate the dollar becoming weaker, okay, which just meant that we did understand that gold could push up, and that's what it done. It pushed up. But as we now look at this on the daily, you know, we are looking really for gold to continue pushing down lower. We've had some wicks beneath, which could give us the indication that there's quite a few buyers that's come into the market. But ultimately, just based on the schematic that we're seeing here, you know, we would like to have at least one more retest around the 1737 area. That would give us a good, because we can also see this block here, this lit block, this bearish candle. It would give us a good chance of being, as well as this one here on the daily. It could give us another chance just to think about going long based on what price action is showing us. And as I mentioned to you, we've got initial jobless claims coming up on Wednesday, combined with the FOMC minutes. So it's really going to be insightful for us to be able to have a look at how the market's going to open up on Monday. And based on that, I would like to make sure that you guys stay in tune with us, go into our Discord, get access to our community. Having access is going to keep you guys informed, okay? My next pair is Euro AUD. Okay, I'm really going over the pairs that I went into last week to give you guys an update on where they're at. We were looking to see a buy, okay? From last week's episode to this week's, we wanted price to push down and take out this equal low, grab the liquidity. We've had that happen, okay? We've got a daily fib here, the 79%, which matches up with the institutional level. We are looking to see some type of reaction here. We want to see some type of fight back from the euro. And of course, when you're looking at Euro AUD and Euro NZD, you often find that Euro AUD moves a bit smoother than EN. So based on that, of course, we was looking for a buy off the 79%, and we've had a really good reaction. But of course, the way how the week has ended, we have to take it into consideration that how the week has ended, we've had a bit of a wick reaction here, but nonetheless, it has been very bearish. So we have to be mindful of how the week opens up next week. But of course, if you guys are in the Discord, you guys are going to keep up to date and informed, and you won't miss a trade. So my next pair I'm going to go over is the S&P, aka the S&Pizzle. And again, I put this chart inside of our community, and what we wanted to do was really catch a short from the 79%, or just around this candle that I had highlighted in this yellow zone here. We can see price came really close, but not close enough. And unfortunately, what that actually meant was we missed an opportunity, even though price did hit the 70%, but it wasn't something that gave us a lot of confidence. But US 30, if I move over to the next pair, US 30 actually reached the zone, okay? I had a lovely 8-hour setup here, okay? We had price pushing to 50%. It gave us a beautiful sniper reaction, and price was pushing to the down. Price was pushing to the downside. However, when the NFP result came out, we started to get a bit of fight back. Okay, we started to get this nasty consolidative range, price pushing down and coming back up and coming down. So really, what's happening here is, you know, we could have a case of redistribution on our hands here, where price is just consolidating before it looks to continue its sell-off. But nonetheless, this was you know, really nasty price action, which didn't fill me with any confidence, and in actual fact made me want to come out of the trade altogether. But like I said, had a really nice entry from up here. So, you know, whilst price was doing everything down here, it really gave this trade the opportunity to sit risk-free and allow the market to play out and do what it needs to do. I also did get caught up trying to take re-entries off of the smaller time frame down inside of here, but that was when the NFP result came out. It did look really really good for a second. You know, we thought we'd catch a few shorts off of this area here. We had 50% of this session candle, but unfortunately, price was pretty much playing games. So the next pair I'm going to go over is the NASDAQ. Now, I mentioned to you guys with the S&P, it didn't reach the zone. Also with the NASDAQ, we didn't have a zone reached either. So there wasn't really much confluences when we're looking at the S&P the NAS, and US 30, you know, all three of them wasn't really aligned. Okay, I was looking for this candle to be reached. We can see that we had a sniper reaction from the 62%, which does give the market license to push down. But just in regards to a candle reaction was something that I was really looking for. And that's the reason why I kind of sat on the sidelines for the NASDAQ and only just got into the US 30. Now, my last pair I'm going to go over today for you guys is the oil. Okay, oil, as we know, there's been a massive crisis going on, and you know, we've been told that there's a massive oil shortage, which has led to people queuing up for hours on end for petrol. The reality is, you know, oil is something that is not in a oil is not something that's in a finite position. Okay, there isn't no shortage on oil. There might be a shortage on the importation, but it's definitely not on oil. Okay, and how do we know that? Because companies like OPEC every week release their oil checks, their oil inventories, to let us know how much oil they're producing. So what we've really seen here is a really good, well-structured, well-orchestrated plan to boost the price of oil, and they've created what's, you know, another pandemic, you could say, which has led to the price of oil soaring up to almost $80 a barrel. And if we look on the monthly here, because you know we have just recently ventured into a new month, what we can see is really the $100 mark is definitely something that is on the cards, in my opinion. Okay, there's some more imbalance above here, but we can see this monthly candle just sitting at $101 a barrel. That would really be nice if prices could push up there. Of course, at the moment, we've seen that this last month's candle did close above this lower high. So, you know, it would be nice if we got a pullback to continue going higher. And based on that, if I show you what I mean, is with price pushing up to here, we're looking for something like this. Okay, if we could get something like that, then it would be great. I will be looking to buy oil because I do believe that we stand better chances trying to short it from somewhere a lot higher up. So, you know, based on what I've said to you guys today, this is what I'm looking at for the week ahead. Today's Saturday, the market's open tomorrow night. By the time you guys watch this video, the markets may be open or the markets may be opening this evening. So it's very important to mark your charts out accordingly, okay? Be involved in a community that can allow you to interact with other people, okay? Not just interacting with us, the educators, but also interacting with other traders. Form an alliance based on the education or the understanding that you have, because of course, as you've heard before, knowledge is power. And if you guys are involved in a community that provides the right knowledge, then you guys have the accessibility to enter the right trades, okay? As a trader, you guys will know, sometimes the trade may not be a bad idea, but the entry might. And that's very important when we're trading, to make sure that we can have the right entry to hold the right trade. So that's it, Lit Cap Vell. I've been posting the Sunday Outlook today. It's very important you guys like and subscribe if you found this video valuable. Share it with a friend. Also, more importantly, guys, smash the like button and also drop a comment below. You know, what pair would you like for me to go over next week? What's your thoughts on the pairs that I've gone over? And if you do have any valuable information to add towards, you know, how we can improve our services to help you guys, we're more than welcome to leave a comment below or to email us at support@litcapital.co.uk. So based on that, I'm out of here. You guys have a very, very wonderful week. And always remember, every day is money day. Peace.